Entrepreneurs, I'm going to give you 5 tax myths when it comes to businesses. Number one, most people think that a business address makes your return look like it's more professional and more real. The IRS does not care about that. You're paying $50 a month and pretending to have a business address when Google will show that that's probably just a mailbox or a place that is designed for just that purpose. Think about it. It doesn't take much. And if the IRS is looking at your taxes, if they are going through the trouble to audit you, trust and believe they are verifying all information. So the first myth is having that business return, that business address, that it makes you legit. That's number one. Incorrect. Wrong. Number two, when it comes to being able, what you can write off. I have said it several times, and now that the big beautiful bill has passed, maybe you guys will hear me. In 2000, when the former number 45, who is now 47, was in the office before, he passed the Tax and Jobs Acts of 2017. At that point, if you do not have your business set up correctly, you cannot benefit from the deductions of a home office. And many of you have been probably, when you're doing it on TurboTax or you're doing it with the companies that allow you to do it yourself, you're probably putting the information in. Look at your printed return so that it will show you that I am not just the one saying it. Just because you give people information or you put it in does not mean that that tax software will use it. In fact, if it's incorrect, they will not use it. So that's myth number two. If your company is not set up correctly, there are certain deductions that you can no longer take. Myth number three, you cannot continue having a loss as a company, especially if all of your business deductions are still on your personal return. After 3 years, 3 consecutive years of a loss, the IRS will, if they ever investigate, if they ever audit, they will deem that a hobby and take away all of your deductions. That's why you have to be set up correctly as a business. Myth number four, an LLC is not enough to say that you're separated. Even if you have an LLC and you're still putting your business on your personal return, you are setting yourself up for failure in so many ways. You're setting yourself up for failure with the IRS. You're setting yourself up for failure to get working capital loans. You're setting yourself up for failure to qualify for anything personal, be it a house, a car, anything. You're setting yourself up for failure. And myth number five, that doing one return is enough. Go back to see number four if you don't understand number five. You need to call me. I am accepting appointments to do mid-year checkups. You need to call the Queen Bee and get your taxes done right. Get them done the first time, so that I don't have to charge you when you've got to get it amended. It's been your girl. Make sure you watch. Make sure you like. Make sure you subscribe. Leave me a comment and share it with a friend. Bye-bye.